Mike Tedeschi, Wealth Management Advisor, Perspective Wealth Planning. With this week's market breakdown video, we're going to take a look at the four major U.S. indexes. We'll also jump in and take a look at the commodities. We're going to talk about breadth readings, and we are also going to look at the incredible thrust that we had on Tuesday after Monday's sharp sell-off in the markets. Let's jump right in here. First and foremost, S&P 500 still up near those all-time highs, and as we always talk about in terms of our trend, we're watching to make sure we have higher lows put in. The sell-off that we saw into the beginning of this week on Monday was really sharp. You can see that's a pretty big drop there from almost 4,400 back down to almost 4,200, but we didn't make a lower low, and that's the important thing. So our uptrend is still clearly intact, and market, while it looked horrible on Monday, Tuesday, we rallied right back, got all of those losses back from Monday and then some, and we followed through again on Wednesday. So that is really, really strong behavior. Dip buyers are still stepping in where they're supposed to. Let's take a look at the rest of the indexes. The NASDAQ clearly didn't make a lower low either. Continues with its higher lows up near those all-time highs. Really strong action from that leadership index, so that looks pretty solid there. The Dow did not get back to the bottom of the range. It has been a lot messier. It has basically been range bound since the beginning, end of March or so, and we're still trapped inside that range, but we did not take out the important level down here, that 33,200. As long as we stay above that, things look good. I am looking for that potential move back up over that 35,000 level. This is kind of that resistance zone between 34,800 and 35,000. A breakout above that would be a very, very good sign. Now the Russell was the weakest of all of the indexes. We've talked about this for a while. The incredible run that we had in the end of last year has led us into this range where we really have just traded sideways, really since the beginning of this year, with no real price appreciation out of the mid and small caps. However, the bears can't ever get control of this index so far this year, and anytime that we have any sort of weakness, it still holds above this major support zone. So this really is just kind of sideways churning action, which is completely healthy after the incredible run-up that we've had. And if you notice that sell-off there into Monday, we did not fall below that 2,100 level. We did not break that support, and we've made that bounce back here. So as long as we hold above this zone, things are still okay in this area of the market. A couple weeks back, we were talking about that potential breakout right here to new highs. It hasn't happened yet, and this is one of the reasons why I'm always talking about I'm not necessarily trying to anticipate what's going on. I want actual confirmation before I'm going to put my capital to work, meaning we make new highs, we're in the trade. If we come right up near it, I'm not going to guess that it's going to make that breakout. I need to see that confirmation, and that's what we really are looking at in these videos. Now, speaking of confirmation, let's go look at the U.S. dollar. We keep talking about it needs to break this zone right here in order to put a higher high in here over any prolonged period of time. Earlier this week, market pushed kind of right back up into that level, and I'm going to draw that horizontal line. Right here is where we got up into. I heard a lot of people saying the dollar was making its breakout. Has not done it yet. This is still technically a lower high, and until it gets above that, this chart is still a mess. We know that we have higher lows that are put in, and we still technically have lower highs that are put in. So we are more this type of pattern than anything else. If we do get that breakout and move over 94, that would be a change in this chart. It's really, really close, but it's not there yet, so we can't say that the tide has turned so far. We come in now, we'll take a look at the commodities. We take a look at gold. Gold is hovering around that 1,800 level. You can see we had that area of weakness breaking down to that 1,750 zone. We immediately got back up over 1,800. We're still holding over it. This chart is still a mess, hasn't accomplished anything in quite some time. And silver's looking weaker, which is a bit of a concern. And here's the thing. Again, we talk about those actual lows. If that holds right here, is technically still a higher low, meaning that uptrend in the lows here of the last few months is still intact, and we still kind of have that flat top in at 29. But this was not the action that we wanted to see. We really didn't want to see it fall back below 26, right? Because this, it could potentially be that bear flag. right? We would need, again, to see more follow through, and we would need to break underneath of that like 2375 zone for this chart to really stop looking good. It's still a fine looking chart, again, with those higher lows in place. But again, we've just been churning sideways for quite some time. A lot of people watching this area is wondering, when are we actually going to get that follow through and that move? Well, we just have to be patient. We can only take what the market gives us, and right now it's kind of in a hold pattern. We come into Palladium. Palladium, really not good action here this week. Really sold off sharply. But again, when we pay attention to our lows, right, this could technically still be that higher low. We didn't break underneath that 2,500 zone, but we really were hoping to see this get back up over 2,900 and kind of keep pushing. It's kind of having difficulty at that 2,800 level, and 2,500 is really that area of support. So this too, while it's the better chart out of the precious metal space, it's still having some difficulty here as well. Platinum still holding over that 1,020 zone, but I mean, you had that break, push back up into that 1150 area. You're looking for that follow through, didn't happen, right? Again, this whole space really just kind of is a mess. Part of that reason is the dollar's seen strength here as of late. We really don't have a resolution on any of these things, so again, we're just going to keep analyzing and keep taking a look at them for that next potential movement. The other commodity I really want to jump in and talk about here this week would be oil. Oil made a super sharp sell-off. We talked about that 75 to 77 zone for quite some time. We came up, hit it, failed. This was a huge down day. All right, this was a over 8% move there on oil, where we were up in the mid 71s and fell all the way to 65 and some change intraday. Look at the rebound, right? We got the whole day's movement back within 3 sessions. So that's pretty strong, but now when we're looking at the short-term chart, we definitely have a resistance zone in here about that 71.50. Back above that, we can push back into that 75, 77 zone. There's still a ton of resistance in that 75 to 77 zone, but now the lines are very clearly drawn. Underneath 65 is bad. Obviously above 77 would be really good. In between, kind of just a mess. But this could easily be that breakout, back test, and then we could see where this goes. So we're definitely paying very close attention to what's going on inside the oil market. We talk a lot about breadth. It's very, very, very important. And when I'm looking in at this chart, this negative 300 on the NASDAQ McClellan Summation Index is really that important line in the sand. Since the sell-off at the beginning of last year, we have not fallen below that. Okay, we've tested it a couple of times. We did in May when we saw that weakness in the market, right? Made that sharp bounce. And then look where we bounced into, right? This was an important resistance zone. That 300 zone on the upside and that negative 300 zone in on the downside is that important range. Where this chart goes, the market is going to go, because it is a reading of breadth in the overall market. If we continue to see weakness and we break underneath that 300 level, that would be a major area of concern. It's tough to see right here, but we do start to see that kind of turn from the action here over the last couple of sessions. It's going to take a couple of days to play out, but we could get that crossover right here and start to turn back up. Paying very close attention to this chart. I believe this is a really, really important area to continue to watch. This week, if you were paying attention to individual names, looking at what was going on underneath of the surface, it seemed like the world was ending on Monday. It's just huge red underneath of the surface. Now, what happened on Tuesday was we had an incredible level of New York Stock Exchange up volume, right? The amount of stocks that moved up that day were huge. We cycled from below 15% to above 85% back-to-back sessions. And we did this within 10% of a recent high in on the S&P 500. The data set for this is very interesting, which is why we're going over it here today. When we're within 10% of a recent high in the S&P 500 and we have that reversal in terms of volume, the market has been positive 100% of the time a month later, right? That breadth thrust has been really, really strong. We go out a year outside of, and this is all in that 2007 zone right in here, right? The market was positive essentially as well and up large. When we see really, really solid volume thrust up near highs, you usually get that follow through. That's what this data set is saying. And as I just laid out at the beginning portion of this video, none of those important lows were broken. So the market here still looks very, very bullish. This is very different than when we look at the up volume when we were below 10% of a recent high. When we look at the data like that, we are negative a high percentage of the time in the beginning portion of the session because you get those types of thrusts on first sell-offs on the way down a lot of times, which doesn't mark the overall bottom, but you do notice a year later it's a very high percentage positive because, you know, it happens a second, a third time, it ends up usually leading to a bottom. Reason why I wanted to show you this, whether you're up in 10% of the high or you're down below 10% of the high, a year later, the market is positive a very high percent of the time after those incredible breadth thrusts that we just saw in on Tuesday. So, you know, the joke kind of this week was we had a bear market on Monday and we had a full economic recovery on Tuesday. It was a very impressive move up that we had on Tuesday, and that does bode well when we look at the data sets moving forward. The takeaway from today's video is pay attention to those bigger picture charts. While things looked really, really bad on Monday, no key levels were broken on any of the major indexes. There wasn't a reason to change our stance until those things happen. That's why we look at all this information on a weekly basis. If we do break down, if we do start taking out and making lower lows, we'll certainly let you know, and that would change our stance. But until that happens, dip buyers are still in control, and as we can see after the thrust that we saw on Tuesday, it bodes well for the market over the next year. As always, I hope you guys found this information useful. If you guys would like to talk anything about the overall markets with me, feel free to reach out at mtedeschi@perspectivewealthplanning.com, or you can give me a call at 814-580-9881. I'll see you guys next week. Take care.